Hello, everyone. Thank you for making it. So my name is Matt Bernstein. I'm a corporate securities partner at Ellenoff, Grossman, and Schole, focused on representing microcap to midcap companies and investment banks that service them. Today, I'm going to talk about cash preservation and raising capital in the microcap space. So it's going to be a little interactive, so I hope everyone's excited to get involved. So does anyone have anyone care to guess when the first corporations are said to have been formed? Anyone? Didn't think so. America? So no takers, okay. I like it. So apparently there's an argument that the first corporation was made in the 1300s in Toulouse, France. But in the US, the first corporations were in the 1790s. Second question. Can anyone guess the first question asked by the very first prospective investor in that very first company?
When can I sell my shares?
Are there warrants? So that is correct, right? What's my return and when am I getting my money back? But the second question, and that's what we're going to talk about today, how long will my investment last? Cash preservation is immensely important for all companies, but in particular, it is important for companies in the microcap space. But how and where can you preserve cash? Certainly, smartly and efficiently spending on operations is important. But for companies that are operating, you want to make sure that you are putting all the resources that you can towards your operations. So where else can you preserve cash? Thoughts? Title of my... Lawyer fee, exactly. Thank you, Ritesh. Professional services is exactly where you can start to think about preserving cash. These services include items like legal and accounting and banking services, and can cost microcap companies in excess of over $1 million a year. So we service professionals tend to be a necessity, but there are ways to think about reducing the costs of using service professionals. The first one I want to sort of talk about is knowing what you're paying for and how much you're paying in advance of engaging a service professional to do the work for you. So we at EGS, we try to solve this problem, for example, by offering flat fee arrangements to our clients to ensure that they know exactly what they're going to be paying for and exactly the services they'll be getting at the time. There are other options as well. You can talk to service providers about forming budgets or having caps, right? But again, right, you want to be in a position where you know exactly the services that you're going to get and you know exactly how much you're going to pay for them, because the last thing you want to see from a service professional is a bill that is in excess of what you expected it to be. A second thought that we have is finding service providers in the space, and there are plenty of them here today. Thank you all for joining me. The reason that it's nice to have service providers in the space is that they know the lay of the land. They've done the work before, they've worked with the professionals in the industry, and they know, what the expectation should be for you as a microcap company, and how much time it might take, and the resources that you'll have to devote in order to get the job done. So moving sort of past the professional services part, it is of course also important to control costs and use your capital efficiently in operating costs. One of the things that we see most frequently with our company clients is that they'll get an influx of cash and they'll immediately try to spend it. Right? And so you really want to think through how you're spending that cash, right? Just because you have it doesn't mean you need to spend it right away. You want to look at critical operational goals over the short term and spend to achieve those goals. Hire only the people and advisors that you need to achieve those goals. You don't want to hire additional personnel because you can, right? To the extent that you can continue to act efficiently, we have several clients who, forego hiring an employee, for example, and hire an advisor to help them with accounting matters. So, these are the ways that we think about cash preservation. So I'll pause here for a moment if anyone has any questions or thoughts that they'd like to share on this particular point. and then I will move to a discussion of capital raising.
I'm thinking about doing a pipe. How much money it costs?
A pipe.
A pipe.
For what services are you? All right, so that's actually the next topic, sir. So I'd appreciate if you could be patient.
What about D&O insurance?
D&O insurance is quite expensive, and it has only gotten more expensive over the last few years. I would recommend that you speak to many of the providers who are outside here today about thoughts and quotes. The cost can range considerably depending on your corporation's risk and the services or products that you provide, and so, yeah. Anyway, thank you. Okay, so discussion of capital raising. I was going to talk briefly about types of equity raises, but I'm not sure that the crowd will be that interested in that. So rather than discussing that, let's talk about costs. So the gentleman in the front asked earlier, how much does it cost to do a pipe? The first thing to think about when you're doing an equity raise is, first of all, who do you need to be involved, right? I had a gentleman speak to me earlier today and ask about broadly soliciting without an investment bank for a private company. Can I do that, and how can I do that, right? So there are practical difficulties in engaging in a transaction like that, and there's also, realities that have to be thought through. So in a transaction like a pipe, right, you'll generally, first of all, you'll want legal counsel. EGS is known for our pipe practice, and so we'd be happy to represent anyone or answer any questions about it. But you'll want legal counsel because there are many pitfalls in the securities laws that you have to avoid when you're raising capital in a private transaction, whether it's who you can solicit or who you can offer securities to, how you can offer securities to them. There's many different things that you need to think about. In terms of cost, it really does depend on the type of transaction you're looking at. If you're looking at an equity pipe, like Mr. Ellenoff suggested in the front, from a legal cost perspective, you're probably in the range of $50,000 to $100,000. You're probably going to deal with banking fees somewhere in the range of, say, 7 to 10%. You might be dealing with expense reimbursement, so 7 to 10% of gross proceeds. You might be dealing with some expense reimbursement, and then if you're a public company in a pipe, right, so not a private placement, a pipe, you're probably also dealing with a resale registration statement for the investors involved, which, depending on the law firm you use, could run you anywhere from, say, $50,000 to $100,000. So hopefully that answers your question in terms of costs. Any other questions on costs? And then Reg A costs. That is an excellent question. We have not been seeing very many Regulation A deals getting done of late. I would anticipate that the Reg A cost would be sort of similar to an IPO. So depending on where you are as a company, right? In other words, have you already engaged an auditor and already have an audit done? Do you have D&O insurance, as the gentleman in front asked earlier? The cost can vary considerably. Assuming that you're already a public company, though, I would expect, again, the cost to be similar to a public offering, because you're still going to, assuming that you're engaging in an investment bank or advisor, you're still going to need to pay the fees to that advisor, and then on top of that, you'll have your legal expenses, deliverables such as comfort letters and other items, and then, of course, the reason that I think Reg A is so attractive to so many companies is the marketing aspect, right? And so the cost of marketing is going to be a bit more than, say, a public offering, and I think that overall those are, you'll end up around the same place. Okay, so the last point I had for today was timing considerations. This is one that is near and dear to my heart. We often see our clients find themselves in positions where they do not want to be, right? They wait until the last minute to raise capital because they don't want to engage in further dilution. They don't want to affect their stock price in a time where they don't need capital. You'd never want to raise money in a time of weakness, right? It's extremely difficult. First of all, you have no idea what the market's going to look like, right? And timing the market, best of luck, right? Put your finger in the air. So you want to raise capital opportunistically. It's one of the benefits of being a public company, right? And especially in the microcap space. You never know when your stock might run on news or otherwise. And you want to be in a position to be raising capital, again, from a position of strength. A lot of investors in the space will look to your financials and see what your runway is. They won't want to invest in a company that's a going concern, where the capital might only last for 2 months or 3 months, where they might not be able to have a liquidity event themselves, right? So again, I think it's critical for companies in space to always be thinking about raising more capital. Of course, if you're cash flow positive and you don't need to. But if you are capital hungry, you should be thinking about it opportunistically and sort of always. So with that, I've got nothing else. If anyone has any questions that they'd like to ask, I'm happy to address them. I too will second myself to the blackjack table as the gentleman before. But first, questions?
Thanks, Matt. When you're operating under a fixed fee agreement, are your associates and partners even required to track their billable hours?
So we do track our billable hours. We track them for a variety of reasons, and thank you for the question. So yes, we do. The way we think about it, right, is that you shouldn't be paying for our associates learning, right? And so we know we have a general idea of what whether it's a financing or a general retainer for a monthly retainer for a public company. We have a general idea of what that should cost, and so we don't want to put the cost of training on our clients. And so yes, we do keep hours, but when you receive your bill, you don't. I mean, if you want to see them, you can, but you wouldn't see them as a general matter. All right. Well, thank you everyone for coming, and have a great rest of your evening.